Welcome to TechGolly Weekend News.
This week's top news headlines. NVIDIA dominated the AI market in 2024 amid rising competition. Canadian economic confidence is lower amid U.S. tariff threats. AT&T and Verizon contain Chinese hacker threat Salt Typhoon. Final compensation payout for Madoff victims reaches $4.3 billion. Chinese stocks end years of decline with 2024 annual gains. Bitcoin surges past $100,000 in 2024 and could reach $200,000 by late 2025. Tech stocks in 2024, the hottest performers and investment insights. Putin pushes for Russia-China AI partnership amid Western sanctions. H-1B visa debate highlights America's reliance on imported tech talent. Hybrid cars outpace battery-only models in China as market shifts. NVIDIA has had a remarkable year, with soaring revenues and stock prices fueled by strategic investments in artificial intelligence. Riding the generative AI wave, the company has repeatedly vied with Apple for the title of the world's largest publicly traded company, occasionally surpassing the $3 trillion market cap. CEO Jensen Huang has become a key figure in Silicon Valley, meeting industry leaders and global policymakers as NVIDIA continues to advance AI innovation. The company is ramping up production of its new Blackwell chips for AI applications. In the coming quarters, it projects billions in revenue from these high-powered processors. NVIDIA's dominance stems from early investments in AI software, particularly its CUDA platform, which unlocked its graphics chips' potential as powerful processors. This first-mover advantage has allowed NVIDIA to maintain an estimated 80% to 90% market share in the AI chip industry. Major cloud providers like Microsoft, Amazon, Google, and Meta continue to invest heavily in NVIDIA's technology. Data center revenues are 87% of NVIDIA's $35.1 billion quarterly revenue. The high demand for NVIDIA chips is so intense that the company's backlog is nearly a year long, reflecting a thriving AI market expected to grow in 2025. However, competition is intensifying. Rivals such as AMD and Intel strive to capture NVIDIA's market share, with AMD's MI300X chips positioned to compete directly with NVIDIA's Hopper series. Additionally, NVIDIA's own customers, including Google and Amazon, are developing proprietary AI chips to reduce reliance on NVIDIA's semiconductors. The industry shift toward inferencing AI models, less resource-intensive than training, could also impact NVIDIA's hardware demand. Despite this, CEO Huang has emphasized that NVIDIA chips are equally adept at inferencing, ensuring continued relevance. Despite mounting competition, analysts predict NVIDIA's market dominance will persist, bolstered by its robust hardware and software ecosystem. As the AI sector grows, NVIDIA is poised to benefit from the overall expansion, even if its market share experiences slight erosion. Canadians are increasingly pessimistic about their economic outlook. Threats of U.S. tariffs under Donald Trump's administration create uncertainty for Canada, one of America's largest trading partners. The growing pessimism stems from concerns that the new U.S. administration may impose tariffs on Canadian exports, which are crucial for industries such as energy, automobiles, and minerals. Canada relies heavily on access to the U.S. market as a top crude oil supplier and consumer of American-made goods. Economists warn that tariffs could reduce Canada's GDP by an estimated 2% to 4%, depending on their scope and Canada's countermeasures. Last month, Trump proposed 25% tariffs on all imports from Canada and Mexico, conditional on efforts to curb migration and fentanyl smuggling. While Canada is a relatively minor source of both, with U.S. agents seizing only 50 pounds of fentanyl at the northern border compared to 20,800 pounds at the Mexico-U.S. border in the past year, Canadian officials have announced plans to bolster border policing and monitoring. Financial markets also signal concerns, as the gap between U.S. and Canadian 10-year benchmark bond yields has widened to levels not seen since the global financial crisis. This spread indicates a dimmer outlook for Canada's long-term growth and inflation prospects compared to the U.S. According to Bloomberg Nanos, the Canadian Confidence Index, which measures sentiment through weekly polling, has dropped to 49.08, the lowest level since November 2023. A reading below 50 reflects net negative views, and the index has been steadily declining since Trump's election on November 5th. Based on weekly surveys of 250 Canadians, the index tracks views on personal finances, job security, the economy, and real estate, with results averaged over 4 weeks. AT&T and Verizon have successfully neutralized activity from Salt Typhoon, a Chinese hacking group responsible for infiltrating at least 9 U.S. telecom companies in an extensive spying operation targeting prominent political figures. The breach, labeled by Senate Intelligence Chairman Mark Warner as the worst telecom hack in our nation's history, by far, required extensive efforts to secure the networks, including replacing outdated routers and switches. Verizon Chief Legal Officer Vandana Venkatesh confirmed the absence of any recent Salt Typhoon activity in their network. An independent cybersecurity firm validated this assessment. Similarly, AT&T reported no current nation-state activity within its networks, reaffirming its commitment to collaborating with government officials, other telecom providers, and third-party experts to fortify its systems and safeguard customer data. While AT&T explicitly attributed the attack to the People's Republic of China, stating the hackers targeted a small number of individuals for foreign intelligence purposes, Verizon refrained from naming China directly. Still, it acknowledged that high-profile government and political figures were specific targets. Both companies have informed affected customers of the breach. In November, T-Mobile detected attempts to infiltrate its systems from a compromised wireline provider's network. To mitigate further risks, T-Mobile severed its connection with the provider, preventing the attack from advancing and securing sensitive customer information. Although the company couldn't definitively attribute the attack to Salt Typhoon, it reported its findings to the government for further evaluation. Despite the containment, officials remain cautious. Deputy National Security Advisor Ann Neuberger recently highlighted the complexity of eradicating such threats, suggesting the need for comprehensive updates to outdated infrastructure. AT&T and Verizon stress the importance of ongoing vigilance and collaboration to counter nation-state cyber attacks and protect sensitive information. The U.S. government fund created to compensate victims of Bernard Lawrence Madoff's infamous Ponzi scheme has announced its 10th and final distribution, marking a significant milestone in one of history's largest financial fraud cases. The Madoff Victim Fund, overseen by former SEC Chairman Richard Breeden, has disbursed $4.3 billion to 40,930 victims. A final payout of $131.4 million will be distributed to 23,408 claimants, concluding the allocation of all available forfeited assets. The fund, created by the Department of Justice, has helped individuals, schools, charities, and pension plans recover an average of 93.71% of their proven losses. This initiative will officially close in 2025. In addition to the fund's efforts, Irving Picard, the trustee responsible for liquidating Bernard L. Madoff Investment Securities, LLC following its collapse in 2008, has recovered $14.72 billion. These efforts have returned approximately $19 billion to Madoff's victims. Payouts were distributed to claimants across 127 countries, reflecting the global impact of Madoff's fraud. Breeden emphasized the importance of ensuring no victims were overlooked. He said the process aimed to identify all losses and deploy recovered assets equitably. He also urged continued vigilance in financial investments, reminding people of Madoff's complete depravity and the devastating consequences of unchecked greed. Settlements with J.P. Morgan Chase, Madoff's former bank, and the estate of Jeffrey Picard, a former Madoff investor, initially financed the fund. The Justice Department's additional recoveries increased its assets to $4.05 billion. Madoff's scheme defrauded investors of up to $64.8 billion and went undetected for years until his confession in December 2008. Madoff pleaded guilty to 11 criminal charges and was sentenced to 150 years in prison. He passed away in April 2021 at age 82 while serving his sentence. Chinese stocks closed 2024 with notable annual gains, marking a turnaround after years of losses. Despite a dip on the final trading day, optimism surrounding policy support fueled a year of recovery. The blue-chip CSI 300 index, which tracks the largest companies listed in Shanghai and Shenzhen, climbed 14.7% this year, breaking a 3-year losing streak caused by the COVID-19 pandemic, property market issues, and low consumer confidence. Similarly, the Shanghai Composite Index rose 12.8%, ending 2 years of declines. Hong Kong's Hang Seng Index rose modestly by 0.1% in its final session, capped by a 17.7% gain that ended 4 consecutive years of losses. Analysts at Value Partners noted that the performance of Chinese equities surprised many investors, attributing the turnaround to robust policy support during the latter half of the year. Measures such as interest rate cuts, home purchase incentives, and funding schemes for stock buying exceeded expectations and helped counterbalance ongoing economic concerns. Since September, key actions by Chinese authorities have been instrumental in stabilizing the capital markets. These measures included bold steps to revive the economy and restore domestic confidence, with policies focusing on monetary easing and support for the property sector. China Asset Management emphasized that stabilizing the market had become a policy imperative. Banking stocks led the recovery with an impressive 34.7% annual rise, driven by strong performances from China's 4 largest state banks. The chip sector also surged 53.9%, buoyed by domestic investors' interest in local semiconductor companies amid U.S. chip restrictions. However, mainland stocks faltered on the final trading day, with the CSI 300 index falling 1.6%. Strategist Dai Qing from Chongjiang Securities suggested that policy expectation-driven trading is entering its final phase. Looking ahead to 2025, the dividend-paying stocks may outperform, particularly as potential market disruptions loom with U.S. President-elect Donald Trump's inauguration in January. Bitcoin's remarkable rise in 2024 saw its value double, reaching a historic milestone of $100,000. This surge was driven by the U.S. Securities and Exchange Commission's approval of exchange-traded funds tied to Bitcoin's spot price and optimism surrounding regulatory easing as Donald Trump prepares to return to the White House. The milestone has reignited enthusiasm among cryptocurrency supporters, propelling Bitcoin to its strongest year since its inception. According to CoinGecko data, Bitcoin's 120% increase this year and a nearly 50% jump in Ether have lifted the overall cryptocurrency market value to approximately $3.5 trillion. Analysts forecast further gains, with projections of Bitcoin hitting $200,000 by late 2025. According to brokerage Bernstein, this growth will solidify Bitcoin's position as a leading store of value, potentially replacing gold and becoming a staple in institutional portfolios and corporate treasury strategies over the next decade. MicroStrategy, the largest corporate holder of Bitcoin, saw its shares surge nearly fivefold in 2024, mirroring Bitcoin's success. Recently added to the Nasdaq 100 index, MicroStrategy is increasingly viewed as a proxy for the digital asset. Inspired by its strategy, several smaller companies allocate parts of their cash reserves to Bitcoin. The cryptocurrency sector's turning point came in January when the Securities and Exchange Commission approved the first exchange-traded funds tracking Bitcoin's spot price. This milestone in the industry's mainstream adoption saw major financial institutions like BlackRock and Fidelity introduce these products, bolstering institutional confidence in the crypto market. Donald Trump's election victory also significantly boosted the sector. His promise to make the U.S. the crypto capital of the planet resonated with advocates who had donated millions to pro-crypto campaigns. While major crypto stocks like Coinbase, MicroStrategy, and Hut 8 thrived, some miners struggled. Riot Platforms, Marathon Digital, and Bit Digital faced declining margins due to rising energy and hardware costs, losing between 26% and 32% this year. Technology stocks continued to dominate market interest in 2024, delivering significant returns for investors who monitored this dynamic sector. While the past year showcased extraordinary gains among certain tech stocks, it also highlighted underperformers that may present future opportunities. Palantir Technologies led the pack of top-performing tech companies, soaring an impressive 340.5%. NVIDIA followed with a 171.2% gain, fueled by surging demand for AI technologies. Other notable performers included Broadcom, Arista Networks, and GoDaddy, with returns of 107.7%, 87.7%, and 85.9% respectively. Meanwhile, stalwarts like Oracle and Dell Technologies delivered solid gains of over 50%, showcasing their ongoing relevance in the industry. On the other hand, several tech companies struggled in 2024. Intel experienced the steepest decline, down 60.1%, while Enphase Energy and Microchip Technology posted losses of 48% and 36.4% respectively. Adobe and ON Semiconductor also saw declines of over 20%. Such underperformance can occasionally be attributed to prior periods of rapid growth, when investors recalibrate expectations as businesses adjust to their new valuations. The Magnificent Seven tech giants also delivered impressive results, with NVIDIA leading the way at 171.2%. Tesla and Meta platforms posted 62.5% and 65.4% gains, while Amazon's 44.4% rise underscored its consistent growth trajectory. Apple and Alphabet recorded strong performances of 30.1% and 35.5%, respectively, while Microsoft's 12.1% gain reflected steady progress. Investing in technology stocks requires careful analysis of business fundamentals and industry trends. However, investors seeking exposure to the tech sector without in-depth research can consider index funds or exchange-traded funds. These funds provide diversified exposure to technology stocks, tracking collections like the Nasdaq Composite Index or other sector-specific indices. Ultimately, patience and research remain key to successful investing. Passive strategies often outperform active trading, as holding stocks or funds over time allows investors to capitalize on long-term growth. As Warren Buffett famously advised, investors should be selective, waiting for opportunities that align with their understanding and investment goals. Russian President Vladimir Putin has directed the government and Sberbank, Russia's largest bank, to strengthen collaboration with China in artificial intelligence. This directive, published on the Kremlin's website, follows Putin's recent announcement to work with BRICS nations and other allies to advance AI technologies. Sberbank, a leader in Russia's AI initiatives, has been tasked with deepening technological research and development ties with China. This move is critical to overcoming the challenges posed by Western sanctions. The sanctions aimed at curbing Russia's technological capabilities amid its ongoing war in Ukraine have significantly restricted access to advanced microchips, including the graphics processing units essential for AI development. Global microchip producers have ceased exporting to Russia, leaving the nation scrambling to source alternatives. In 2023, Sberbank CEO German Gref acknowledged that GPUs remain a particularly difficult resource to replace. By fostering partnerships with non-Western nations, Russia aims to counter the United States' dominance in AI, a field widely regarded as pivotal for future technological and economic progress. Putin recently announced the creation of an AI alliance network designed to bring together experts from BRICS countries and other interested nations. This initiative underscores Russia's intent to build a global coalition in AI research and innovation, leveraging the strengths of its allies. According to Tortoise Media's Global AI Index, Russia currently ranks 31st out of 83 countries in AI innovation, implementation, and investment. This position places it behind global leaders like the United States, China, and BRICS peers India and Brazil. Strengthening ties with China, a dominant force in AI, could provide Russia with the technological expertise and resources it urgently needs to advance in this competitive domain. The H-1B visa program, a cornerstone of America's tech industry, remains contentious, underscoring the nation's dependence on foreign talent. Created in 1990, the program allows U.S. companies to hire highly skilled workers from other countries to fill specialized roles in software development, computer science, and engineering. Companies such as Amazon, Google, and Tesla are among its major users, employing H-1B holders for critical technical positions. The annual cap of 85,000 new visas is vastly oversubscribed, with hundreds of thousands of applications submitted yearly. A lottery system determines the recipients, while employees of universities and certain nonprofits are exempt from the cap. Despite this limitation, the demand for H-1B workers remains high, fueled by a persistent skills gap in STEM fields. In October 2024, there were twice as many job openings as unemployed professionals in the professional and business services sector, encompassing most tech roles. Critics argue that the program underpays workers, with 60% of certified positions earning below the local median wage, according to a 2020 Economic Policy Institute paper. Attempts to reform the program, such as raising wage requirements under the Trump administration, failed to take effect during the Biden presidency. Despite its flaws, the program is widely regarded as a driver of innovation. Studies show that companies winning the H-1B lottery experience revenue and workforce growth, contribute to increased U.S. patents, and elevate incomes for both U.S. and foreign-born workers. Elon Musk and other tech leaders emphasize reform, while MAGA supporters call for prioritizing American workers. Economists note that the companies dominating H-1B allocations, such as Cognizant and Tata Consultancy Services, often use visas for less senior, lower-paying roles. Over the past 3 decades, U.S. software developers have quadrupled to 2.85 million, and computer scientists have grown 7-fold to 3.5 million. Foreign-born workers now comprise 26% of these roles, highlighting the enduring impact of the H-1B program on America's tech landscape. Hybrid-powered vehicles are gaining traction over battery-only models in China as consumers increasingly move away from gas-powered cars. BYD, the market leader, reported selling around 4.3 million passenger cars in 2024, nearly 2.5 million of them hybrids. This marks a shift from 2023, when BYD sold more battery-only vehicles than hybrids. According to data from the China Passenger Car Association, Tesla, a leader in battery-only electric vehicles, is set to sell over 600,000 cars in China for the second consecutive year. Joe McCabe, CEO of Auto Forecast Solutions, noted that while the Chinese market for battery electric vehicles continues to grow, its momentum may slow in the coming years. He predicts continued demand for internal combustion engine-based vehicles, including hybrids, through 2031. Li Auto, a key competitor to Tesla, achieved record sales of 500,508 vehicles in 2024, most of which include fuel tanks for extended battery range. Leapmotor, a Chinese partner of Stellantis, delivered nearly 300,000 cars in 2024 and aims to increase this to 500,000 in 2025. Other Chinese electric car makers focusing on battery-only models reported lower full-year sales. Zeekr sold 222,123 units, while NIO and XPeng sold 221,970 and 190,068 respectively. Both NIO and XPeng included figures from their lower-priced brands, introduced in the latter half of 2024. Competition intensified with Xiaomi's entry into the market. The tech giant launched its SU7 electric sedan in March, delivering over 135,000 units by December and setting a target of 300,000 deliveries in 2025. Zeekr aims for 320,000 deliveries in 2025 after narrowly missing its 2024 goal of 230,000. China's push for new energy vehicles, including hybrids and battery-only models, reached a milestone in mid-2024. Over half of all passenger cars sold in July fell into this category. By November, the penetration rate stood at 52.3%, up from 36% in July 2023. Government incentives, subsidies, and easier licensing in cities like Beijing continue to drive adoption, fostering the growth of domestic players over foreign brands.